Alrighty, greetings once again, fellow traders. This is Robinhood, and today we'd like to go over buy and sell setups. What makes a quality signal? So what is a buy or sell setup? Some people will ask, especially newbies, they don't quite know exactly what it looks like. Very simply put, this is a candle that closes above or below a candle that comes before it. So if you're going to get a buy signal, it's going to close above the candle that came before it. And if you're going to get a sell signal, then it's going to be a candle that will close below the candle that came before it. But you need a little bit more information than this. That's not exactly enough. We have to have some more things mixed into the soup, okay? A quality buy or sell signal is not something that is tied up in the spaghetti. I have another typo in there. That's funny. I'm the king of typos. Spaghetti. Now, what do we mean by spaghetti? We basically mean the moving average. Now, if you're tied up inside of a whole bunch of moving averages that are just all crossing, they're flipping up and down, crossing between each other, and it looks very spaghetti-ish, like a bowl of spaghetti, and you just have, 3 or 4 noodles left, and they're all kind of trailing together, that's no man's land, okay? We don't want something in a dead zone. We don't want something in a dead time period, like between 4 o'clock and 8 o'clock on a New York session, or in the wintertime, I think it's 4 to 7, right? So you want something in the Asia session, you want something in London, you want something in New York, and you would prefer it not be all tied up and wrapped up in spaghetti, okay? So we want to see the natural movement of the market carry us up, up and away in our beautiful red balloon, or look out below, timber, you're chopping a tree down, and you're yelling, timber, look out below, and the tree starts falling. You want something to fall first, dramatically, or to rise first, dramatically, to be on the other side of the MAs, either too low or too high. Then you want to see a changing of the guard candle, which we call a COG. COG is a cog. It just means changing of the guard. And that is a candle that shows us we are indeed reversing and that there is potential for a movement or follow-through. If we have potential, it makes things better. Now, a buy or sell candle, just located like nowhere, isn't really of much use to us. But if it's located in a good place, I mean a price that makes sense, or after a move that makes sense, let's say you have a 15-minute chart and it's been rocking down for hours and hours, and you have the first 15-minute buy signal fails and the second one fails, and now you're down at your third 15-minute buy signal. That's usually a pretty good point, because the first or second one fails almost all the time, okay? Same thing on going up. If you're in a big uptrend and you get a 15-minute sell signal, it's usually just a small pullback, it's nothing. But the third one can be the charm. You may have heard that before. Third time is a charm. Well, it works that way with the candles. The third time or fourth time is usually the charm. It's the good, sweet spot, okay? So we want to have potential, and if we can also land near some moving averages that make sense, or perhaps a fib level, or even a psychological level, like a whole number that makes sense, okay, that's better. And if we can add other things into that mix, into our soup, we're building a soup, right? Trading soup. We want as many things together in our checklist that can help us. So what I'm going to do now is just go right to the charts, okay, directly to them. I'll start off with Canada because that's been working pretty good. We'll move on to Swissy, and then we'll check out a couple of more as time, whoops. Yeah, that's the news guy again. Okay, so let's start off with 5-minute charts. We'll just go ahead and hit the button, all right, and we'll go with 5-minute. Now, way back here, I can see some that look pretty good. We'll start off with the buys, okay, and then we'll look at the sells. This one right here was a very good buy signal. You see that 5-minute candle that was a pin bar or a hammer? That was a nice signal, okay, that prices should revert. But please notice that after, the next 5-minute bar, they did not, okay? Prices, I mean, if you bought that, it was a dud. I'm just going to tell you, it was a complete dud. Now, if you're purchasing that, where does your stop go? It goes just a couple of pips below that candle, bottom. So you would take that candle right there and shoot it down maybe 3 or 4 pips and just put your stop right there. This trade was profitable a little bit. You know, you had a few pips in here, but that's all. Really never went anywhere. Okay? That's a 5-minute buy too, that small one. But it's really not a high confidence buy signal. You can see that you know, you really don't have some huge downward movement. This is a small and insignificant bar, so it's not a very high quality. And if we were, you know, going to be putting our trade on based upon you know, what we consider to be high quality versus low quality, that's pretty low quality right there, and not too interesting. And we wouldn't want to throw a lot at that. Okay. Now, over time, you can see, you know, that within the next 2 hours, both of those trades actually would have been profitable by some small amount. But remember, we're on a 5-minute chart here. So you're not looking for the world on a 5-minute chart. You're looking for very small price movements. And if you're going to trade on a 5-minute, believe me, you want the 1 and the 5 together to help you with your entries and to help you with your exits. Okay? So moving along, we see that shortly after that, we have another good-looking 5-minute buy right here, that green bar. See that we fell 1, 2, 3, 4, 5 bars, and we had a few small bottoming tails. This one dropped as well, and remember, at the bottom, it was glowing red. Okay, so you had 1, 2, 3, 4, 5, but then you had 6. You had 6 bars that were absolutely glowing red. But in the next few minutes, things changed, and it broke that high. So that becomes a buy signal. All right, and on a 5-minute chart, you are not looking for the world. You got back into the river. You might have pierced the river by a small amount. If you're taking a trade like that, you just want to get out very quickly. Now, how much is that trade even worth? Okay, if you were to take it just above that bar, your entry would be about 130.70, and then you have to add the spread. So your entry would be maybe like 130.72, probably. And at the highest point, it was 130.88. Okay, so really, maximum, there was a 16 pip movement in here. That's all. So if you are taking a trade like that, you want it to be small potatoes trade, and you have to get out rather quickly. If you can even capture 10 or 12 pips in a 16 pip move, that's a good place to get out. I would take it. Okay, here is another buy signal. The body closed just above the body of the red, and the wick actually pierced above it too. So it's okay. It's not the most beautiful buy signal in the world, no, but it did have some follow through. It's acceptable. It's acceptable. Here we can see a piercing bar. See the 2 greens going up. You have a small red bar. That's a sell signal. And if you're selling that, you're just looking for a retracement to the river. That's all. A very small potatoes trade, small money made. Okay? That is a buy signal, that big green one right there. Didn't quite break the high of that candle, though. The next bar, you can see how it also had a bottoming tail. But as soon as, you know, as soon as we went through right there, the top of that wick, that was a buy. But you can see it had no follow through. Okay? So not always do you have a buy signal come that gives you some kind of fantastic movement. It really depends on the time of day. It also depends on the currency pair versus how much of a run that you're going to get. Now, here's one that's acceptable. We have 1, 2, 3, 4, 5, 6, 7, 8. Okay, 8 bars south. That one did glow red, but a few minutes before the close, it turned green. Then you have another bar going up. I would look at this whole candle pattern here, that one, and even that one, doesn't matter. as a buy. This will all be like a buy signal. Now that, luckily, fortunately, resulted in a very beautiful run. If you are able to trade in two portions, for instance, let's say you're trading 2 micros at a time, or I don't know, maybe a 0.10, okay? Depends how much account size you have. When you start to see reversal signals like this, these wicks, those 2 wicks, you can tell on a 1-minute chart that that thing is stalling and failing. And when it stalls and fails like that, there is a potential for a shoot straight back down. So if you were to get long, let's say a 0.10, and you get this type of move, and you see any kind of 1-minute sell bars happen up here, you are to kill 1/2 of your trade. You book it. Then you take the other half of your trade, and you put an in-the-money stop loss, plus you add about 1 or 2 pips just for your trouble. So that if it shoots down and hits you, the worst thing that can happen to you on your back half is that you stop out for a 2-pip gain. But at least you got paid on the first half. Then as time goes by, you see this, and you find any more 1-minute sells up inside of this bar, you kill it. Just trust me, just get out. Get out. Take the money and run. Okay, so moving along on our 5-minute charts right now, we can see that this was a small sell signal. That red bar was a piercing bar. And that red bar that came after it by a couple of bars was a complete and total sell signal when it broke that candle's low. Now, if you took that trade, okay, it would have potentially resulted in a loss. If you were putting a stop loss there and you were expecting this to dive back down, you did not get your wish. Within just a half an hour, you saw it going up, and it wasn't looking too good. Okay, so if you took that trade, that would have resulted in a loss if you're using stops. But if you're using our system, where you trade very, very small, perhaps maybe you shorted, I don't know, 0.05, right? Either here on this bar, or let's say on the break of that candle bottom, right? The green one with the wick. So you short a 0.05. It doesn't go down. Time passes by. You see another topping tail. You see another piercing bar. You could short another 0.05. And obviously, you made money on the first one, but you did not make much money on the second one. The second one, I don't know, maybe 2 or 3 pips. That's all. So if your second one makes money and your first one goes out for a 2-pip gain, oh well. There's the small, pathetic buy signal, very tiny, very weak, very anemic looking, small run. Okay, there's a small piercing bar that in essence is a sell signal, this little red one right here, but not a very high quality because we haven't made a dramatic move away from the moving averages. This is all tied up. It's all tied up in the spaghetti. Alright, so basically we don't like stuff that's tied up in the spaghetti because it doesn't seem to have a lot of potential to run anywhere. Okay? Alright, so let's move into some better signals. Now, here you see we start to break away from the moving averages a little bit, and the moving average crossover happens, and we start to flow upward a little. So that's not a very good sell signal, even though technically it kind of is one, but it's just not a very big move away. All right, we're looking for significant runs, and you don't usually want to take the first or the second, or well, actually that one's not a second, but that one would be a second one, right? You don't want to take the second one. Your third time is usually a charm. That one there was pretty decent. It was pretty wide range, and the wider range the bar, the better that it speaks. Okay. Small, insignificant bars are usually very small and very insignificant. Just by the words, that's what it means. It doesn't really mean a lot. But a wide range bar has more meaning. And, you know, you do find them on 5-minute charts. You do. I'm not going to deny that. They do show up. But they're more prevalent on 15-minute charts. And when we get to the 15-minute, you're gonna see that. Okay, so moving along through time, let's see here. We have that one's okay. There's a nice that's actually nice because there's a gap down right there, and then you see that it ran, and you have a bottoming tail. That's a piercing bar. That is a buy signal. This one here is even more so because it's a really wide range bar. It broke that top, so yeah, that would very much tempt me to get long. Okay. But again, if I did get long on this green bar, when prices broke above, boy, that's hard to read, 131.16 or 131.17. Okay, when prices started to break that high right there and became a buy, please notice that as you've gone through time, even though you traded above 131.17, there was no follow-through. There was no additional upward movement to get back up here. And that's kind of what you're expecting, is a gap fill. Okay, because the market hates gaps, and it wants to fill this gap right there and there. It wants to be filled. Okay? So again, if you did get long on that piercing bar or on that buy signal, okay, you were a bag holder, and as time went by, you were down. You were down a small amount of money. There is a small buy signal, but I kind of like that green bar. The reason I like it is because of the bottoming tail there and the bottoming tail there. Now, if you were to take that and you're a person that absolutely must use stop losses, like if you are trading too big, which I don't really recommend, but let's just say that you are, and you're being kind of foolish, trading too big. If you went long right here on the break of that candle high, okay, and you went long right here, your stop loss should be a couple of clicks below this. So you're looking at a price of 130.86. I would bring it down and try maybe 130.84, and I would say that would be my stop loss. And as you went through time, you can see that this trade also would have been a winner. It came up to the river and hit the river and hit a little prior resistance spot. There's some minor resistance here on the 5-minute charts. It's not very big, but it does exist. So yeah, that would be a winning trade. But remember, the gap fill is the real thing that you're looking for. So if you purchased a 0.05 there and a 0.05 over here, and you have two trades on, you're at 0.1, what you could do with a trade like that is take this one off for a profit when it came up, okay, and hold on to your back half of your trade, and you wait until the gap fills or comes close to getting filled, and then you would get out. So over here is when it finally occurred, and that is definitely a sign to get out. Not only because it's hitting the 200 MA, but also because it's partially filled this gap. It went above this area, okay, and hit this little spot right in here too, which you can see. Right, that's that used to be supportive. That used to be supportive just a little bit, right? So we have support there and support there. We know that that becomes resistance. And it is because of the gap and the run, it makes it resistive. So any move up here like this, I mean, that's your perfect exit right in this zone, right in here. Perfect way to get out. Okay, so there's a little tiny baby buy. There's a little baby buy. There's a small little baby buy. But please notice these are not super high quality trades because they're wrapped up in the spaghetti. We'll look at some better ones as time goes on, but for now, let's go to the 15-minute charts where we will see higher quality signals. Remember, the 15 is a great chart, something that rules the market, okay? Now, here you can see that that used to be supportive, and so was that, and so was that. There was definitely support there. It wasn't super powerful, but it did exist. And there was support, and even right there, tried to become supportive, okay? But on that bar, things did not look good at all. That was a big red bar. There was your pause bar, and when this one started to ignite, That is a wide range bar. We call that wide range bar ignition, and that thing means south. That bar right there is a sell bar. Not only is this bar a sell bar, but so is that one right there, and that small one. Well, it's actually pretty big, but this one got bigger. So these are all sell bars right here, and they indicate that prices are most likely to move lower. Now, remember, as you go down and you get far from the MAs, a snapback is usually pretty inevitable. Here, you see a very tiny 15-minute buy, but it only had one bar of follow-through and just a little bit more. Okay, so in the next half hour, or maybe about 20 minutes, really, it didn't pop that much. There's your second buy bar. That looked okay. There's your third one, is actually right about there. There's your fourth one right here, but it was really, really small. Okay, that's super tiny. Now that's your fifth buy bar right there. Fifth one that you see. So it's not always third time is a charm. Sometimes it takes 4 times, sometimes it takes 5. But anyway, we know the pattern. It's not just the bar. It also has to do with our pattern recognition as well. You and me both know, or should know, that we're also looking for patterns. This here is basically a falling wedge. A falling wedge is distributive, and somebody is usually distributing shorts that were taken at a higher level and starting to load up for the other side. Okay? So if you took any of these bars, any of these buy bars at all, 5 times you were basically disappointed, but after a brief layer of time, prices started to chew up. And the lift isn't usually that great at first, because of what happens is that this is so steep and sharp that price has memory, and people are very fearful of this, because this is putting in like a monster daily sell, right? It's brutal. So what happens when you get down this low is you can often take quite a big amount of time to chew back up again. And the people that are caught long from over here are desperately seeking to get out on any of these pops like this. They're like, get me out, get me out, get me out. You have to work through a lot of orders first, okay? That's pretty common. Now, let me go ahead and clean this up a little bit. Online tools, delete for symbol, okay? Now we'll go through. And we also see that there, as we move through time, that there's another small 15-minute piercing bar. This one had the potential, when it was happening, when it was at the very top, it was glowing green. It was a monster buy, but it didn't close that way. You see the clock kept ticking, and then it formed a wick, and it did not close above. So even though both of these trades would have gotten me a little bit of excited to go long, it didn't work out great for a while, and then all of a sudden, you got some movement here. So I'd be pretty happy to exit there or there, especially if I could have held until that level. That would be great. This is a 15-minute buy bar here. You can see the red one, right? And we broke right above its high, right above the high of that bar. Right there. Okay, that's a buy bar. And it did have follow-through, which is fantastic. All right. And as we move through time, we'll see that we have some other high quality. The higher quality ones, please take notice that they happen farther away from the moving averages than being all close inside of it. When you get into this spaghetti right here, that's usually not a lot of fun. But when you get very far from the moving averages, that is better off. Now, in this 15-minute bar that has this really big topping tail, there was a high-quality 5-minute sell, and it crashed, and it came back up and kissed it a second time, and then give you another 5-minute sell, and that's pretty good. that is decent. And that's what helped form this 15-minute bar and the eventual pullback to get out. That's about a half an hour. No, I'm sorry. That is about 1 hour and, let's see, 1, 2, 3, 4. Well, no, it's actually 1 hour. I'm sorry. That's a 1 hour trade right there. Okay. So let me clean up these candles and we'll move away from this and we'll go to like another time frame. Now on a 4-hour chart, you can see some very high quality buy bars. As a matter of fact, I see one right there and I see another one right after it. Hold on. That is a high quality 4-hour buy signal. That bar is red, that bar is green, and that bar was glowing green at the very top. Now it didn't close that way because remember it's a 4-hour bar and a lot can happen in 4 hours of time. But still, it was a really good looking 4-hour buy. And to me, that bar is highly indicative of higher prices to come. Now they did come, but notice how long it took. 1, 2, 3, 4, 5. Do you realize that's 20 hours? That's a long time. 20 hours is a very long time to be holding and nursing a trade. But if you were simply a 4-hour trader and you took a 0.10 on this bar and I don't know, 2 days passes by, let's say you took another, well, I don't know if you actually would have purchased another one here, even though that is a decent 4-hour buy, but your prices are still the same. So we don't like to mix our trades too closely together. That can give you a little danger. Here was a pretty small and insignificant bar. The thing that would have excited me about it is the stochastics being deeply down and potentially getting ready for a crossover. Okay, now that bar I would have liked a lot, that little small one. But you can see that after it came an even better bar. All right, so as soon as prices went above approximately 127.85, and then over here 127.87, especially that number, because that's the previous candle high. When prices shot above that, I would be very interested. Okay, extremely much, because there's green, and this thing is starting to light up green, and it's starting to break the high with the stochastics the way they look right there. Okay, above that bar. That's very exciting bar. Very exciting. And I like the fact that even in the next couple of hours that it was retested. So we know that that's support being retested. This used to be resistance right here. And even so, that was resistance too. Okay? Both of them. So when we broke this high of 127.87, this became very attractive. Hours later, shook people out, kissed the breakout spot, and then went up. Here's your pause bar, and then you have another bar of follow-through. That's very exciting. Okay, 4-hour bars like that are a beauty. Here we see an incredible bar. Absolutely drop-dead beautiful. That bar is a screamer. At the low, it was glowing red. It looked so mean and so nasty, you thought it was just going to rip hell open. But, putting our entire system together, we know that all it really did is stop people out below that low. And when this bar finally closed within 4 hours, it was a monster, gigantic green bar that closed right at the top. Now that is highly indicative of higher prices to come because of the power of the bar. So we see that the next bar did it very well, and then slow drift for probably many days. Okay, so let's take a look at some more. We have a really weak and pathetic sell bar, extremely pathetic bar. This tiny little piercing, horrible. These had wicks on them, so they weren't all that great looking. This one here at the low was amazing. When it was all the way down to the bottom, it was glowing red. So that would have excited me quite a bit. I think that would have been a very nice sell bar. But again, where does your stop go? Couple of clicks above the high. All right, so you put your stop right off over here. That would be 131.48. Well, knowing what we know about half psychological levels, you bring it up a little bit, okay? Put your stop at 131.53, 131.55 maybe. You want to be a couple of clicks above this top. So if you took that sell bar on a 4-hour time frame, you were disappointed for a while. In fact, you were disappointed for 1, 2, 3, 4, 5 bars. It's about 20 hours of time. But after that, things became immensely happy and joyous upon that screaming red bar, which is highly indicative of lower prices to come because it's so wide range and it closed very close to the bottom. It says that over time prices should go down. Unfortunately, you can see how long it took. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, oh my gosh, 12. Just whatever, 12 times 4. Guys, that's a long time, okay? That's why I don't really like trading 4-hour charts too much, because you have to hold it for days. I mean, that's, what is that, 2.5 days, I think? It's over 30 hours. It's about 2.5 days worth of movement. All right, let me go ahead and clean up some of these arrows because we're making a mess out of everything. Now, as time has gone by, again, putting our entire system together, everything, we know that on an hourly time frame, this was a push 1, this was a push 2, and this was a push 3. We know that on the hourly time frame, that's how it worked. Then, when we put this part of our system together, knowing that the market makers accumulate in in the bottoms to eventually rock things higher, this bar here would become very exciting. Okay, that is a gigantic green buy bar, and you had a bunch of downward movement come to retest. So let me get rid of this arrow just to get it out of the way, and you can see that it retested. Let me pull this arrow down. I'm sorry I'm taking so long, but I'm trying to do this live here. So it pulled down and it retested these candle bodies and the wicks. So this was 1, 2, 3, 4, 5. Okay, that was about 20-something hours altogether with this bar. It was more than 20 hours. It became a breakout, and it pulled back and tested what should become support. So I love that buy bar, and I love that one too, right after it. Sometimes you will get some pause bars to get rid of people. You have to encourage people to get out of their trades. It's very difficult for something to continue to go up if there's too many people loaded on a trade. So anybody who was long in this bar or in this bar here, it's potentially that they would have exited some of their trades inside of these 8 hours. I mean, they had some profits. It wasn't huge, but they were there. Okay, there was profit. And a lot of people will tend to want to get out when things go dead like this. And that's what gives us all of our different levels of push. So here you have a level of push, 1, with a pullback, 2, and then you've got some pausing action, 3 levels of push, 4 levels of push, 5. Okay, you gotta get rid of a lot of people before you can do stuff like this. The other thing that you'll notice is right here, you had a big fat sell bar on a 4-hour chart. That was a sell. And yes, it actually did have follow-through. There were 2 more bars of follow-through behind it, so it did go down for an extra 8 hours. But according to what we know, that's the moving average crossover that gives you the separation to come, like railroad tracks, wide, separate. Okay, so we would not want to be, I mean, if we did short that bar, after a few hours down, like, what is that? 3. Okay, so that's a maximum 12-hour drop. You start to drop to a place that shows support. Please picture it on the 1 hour. Remember, right now I'm on a 240. Okay? But what does it look like on a 1 hour chart? That's all supportive. And price went higher. So if we did short this and it falls here, you're really, really wise to get out because you're kissing support. Okay? And kapow, there goes your next move. All right? Kapow is a trading term, by the way. No, I'm just I'm just kidding. Kapow is not a trading term. I just made it up. There's your little buy signal. It did turn green, and it did break that high, but it's not super strong. The next bar breaks the candle top. That's a screaming buy signal right there. So this is a little baby buy signal, and this bar is the screaming buy signal. Highly indicative of higher prices to come. Okay? That's a sell bar. It only had 1 bar of follow through back to the river. That is a sell bar. It broke that candle low right there. But it was real small, and it only had 1 bar of follow through. Okay, so let's see. There's a sell bar. It did break the previous low, and it only had a few bars of follow through. That is a screaming sell bar because it looked incredibly green at the highs. Glowing green, mighty and powerful. But things changed in a few hours, and it started to go south. And when it ripped through that low right there, woof, nasty. Nasty, nasty. And not only did it rip through the low, it closed right at the bottom. So when you get a bar like that, that is highly indicative of lower prices to come. But remember, a tremendous amount of this move has already been made. On the hourly chart, or on the 15-minute charts, you would have seen incredible 15-minute sell bars, 1 hour sells with lots and lots of follow through. And half the run is over. I mean, it's so wide range. Look, it took another 1, 2, 3, 4 bars. Okay, it took, well, 4 times 4, that's 16. It took 16 more hours just to finish the other half of the move, you see? So half the move was done in 4 hours, and the other half took 16. That's a lot of time to wait. It really is. Okay, here is a screaming sell bar. You can see that prices broke the high, and it was glowing green, and it rocked down, and it closed at the bottom, and it was absolutely beautiful sell bar, highly indicative of lower prices to come. But not every trade is a winner. Okay? In the words of a famous trader, this always works, except for when it doesn't. I think it was Linda Rashi, I'm not sure if that's how you say the word. She said that. This always works except for when it doesn't. And we have to remember that not everything is foolproof. There are times that things are going to screw up and just make a mistake and not work according to plan. That bar right there is such a screaming sell, but there was no follow through whatsoever. And if you did it, you were stopped. Okay, you were definitely stopped out. It's just the way it is. That also was an amazing sell bar, 4 hour. But look at how little the follow through was. So this is one of the reasons why I don't want to take my signals exclusively derived off of a 4 hour bar. Because by the time you get the signal, a lot of movement is done. Okay? The only way to really do this is when it's happening. Like, when you see this bar coming down and and breaking that low, you have got to be anticipating that this is turning quite red, things are going very badly, and this wants to crash. So your entry would have to be taken in a place like that, a few clicks underneath, okay? And notice too that we're underneath 132. Prices went below 131.97, and when you start seeing prints of 95, 94, 92, 90, you know it's getting worse and worse for anybody who's long. You gotta get in. You can't take too long to think about it. The stop loss either goes there if you are not too risk tolerant, or your stop loss, remember, stop losses are a very personal thing. Your stop loss could either go at this high, or for the more risk tolerant, it could go right above here, or for somebody who really is risk tolerant, above that bar. If I was trading it that way, I can tell you that I definitely would have put my stop above that bar. That would be what I consider to be a disaster stop loss. 132.82, I would give it a few extra pips, and if this thing saw, 132.89 or 132.90, I would have been killed right there. That would have resulted in a very large loss for me. The loss would have been approximately 100 pips. Okay, but you should have a disaster stop loss in mind for all your trades anyway. Okay, and I would consider 100 pips, a pretty good disaster and a disaster stop, which, if you entered based upon this candle, you'd want your stop up here. All right, so let's get off of US Canada. I don't want to make the entire video all about US CAD. Let's go ahead and take a look at US Swissy and see if we can find any decent 15-minute bars. And I see several of them. Right here, we know that we are entering a downtrend. See, this is becoming a beautiful downtrend. So we know that on an hourly chart, this would be like push 1. This would be some kind of a consolidation phase. And then you get a push 2. Here it looks like was your push 3. Okay, but let's say that you didn't even think about it based upon, the push 2 being like the only thing that it would do. Right there, that was a small 15-minute buy candle. It was a piercing bar, and the candle that came after it was pretty good looking. I kind of like that, and I would have been very tempted to purchase this here, very much. But going through time, you can see that it did fall even more. So I probably would have been very tempted to enter again upon that green candle, but the prices would have been too close together. See, my entry would be so close, I don't really see a reason. Why double up at the same price? I don't have a reason to double up at the same price, but that bar would definitely float my boat. I'm just saying I like that bar a lot. If I didn't buy this one or this one, I'd be very tempted to buy that one. Went lower, so it hurts, and you're definitely in a losing trade. But that bar, super exciting, because look, there's a red, and here's a complete changing of the guard. 100% red bar, completely ignored by the green. In fact, that's about 120% of that bar. You see it? It's about 20% higher, or 115% maybe. Well, anyway, it's more than 100. It's more than 110. That's a perfect bar. I love it. I love that bar too. It's super huge, super wide range, and it closed right at the top. Very, very indicative of higher prices to come. If you were to enter, let's say on a break of that little tiny candle, or maybe the one right behind it, or I don't know, maybe even there at that high, you still would like your stop loss. Now, for the most risk tolerant among us, our stop loss would be based on the candle way before it. 96.30 something. What is that? Let's call it 96.40, and we'll give it an extra 5 pips. So 96.35. Okay, 96.35. That would be your stop. 5 pips below here. Or, if you can't handle that kind of risk, you can put your stop loss a few pips under here at 96.45 instead of 96.35. That would save you approximately 10 pips of loss, but sometimes it can come down and nail you and then go higher. So that's why I like to give it the benefit of the doubt and put it further away. Now, you see from this green bar, as time went by, yes, we definitely went higher. Okay. Let's see here. We're looking at sell bars too. There's a couple little baby sell bars. There's a couple of baby buy bars. That one right there is a baby buy. That one is a small baby hammer. That one is a little bit of a baby buy signal too. It's a really attractive bar, but it's mixed up in the spaghetti, so I don't like it when it's mixed in the spaghetti. I like it when it's farther away. You can see the spaghetti is over here, and that bar is super attractive. And especially the bar that comes after it is very attractive. All right? And if we're trading bar by bar, we like to see 2 bars like this. I'm not particularly fond of that red one. Okay, that's a bummer. I don't like that. I like the 2 green ones very much. The red one would not make me happy. But afterwards, seeing that big green bar, I would feel pretty good. I'd feel all right. And as time goes by, that bar would make me really happy. That green one that closes at the top, I'd be like, yes, I got it. That would make me ecstatic. Especially if I see that gets tested there, that gets tested there, and then I see the moving average crossover, and then I see that bar. Whoa, I mean, could you ask for anything better? That's fantastic. And it says higher prices to come. Okay? So for the astute trader that wants to trade 15-minute bars, this is basically what you're looking for. But again, protecting yourself too. Protecting yourself at all times. If you were to take a bar like this and multitudes of time goes by and you see that, all right, you want to get out on some of it and then put a stop loss, right? In the money stop loss plus a couple of pips, and then you see something crazy like this, oof, just leave. It's time to get out of there. All right, let's get away from this one, and we'll go. I'll just pick another pair. How about New Zealand? We'll just randomly pick something, and why don't we take a look at hourly, just for a change of pace here. We'll just go to an hourly chart. Now, we see that we're in an amazing downtrend over here, that we had our moving average crossover, and our moving average is separated wide like railroad tracks and entered a very long and protracted downtrend. So we know that this can go on for many, many, many days, many sessions, right? We can see how long this thing is going on for. That bar right there, that big green one, was an amazing hourly buy. And it did go a little bit higher, but it's still in a downtrend. I would have been very tempted to take that bar. That's a nice hourly buy, and it did go higher. But remember, the river is helping to hold this thing down. Now, that was a pretty good looking hourly buy right there, especially when it was at the top. It was quite green, and I would have been very anxious probably to go ahead and take that bar. And it did have a higher move, but it only pierced into the 20 and the 30, and it didn't go much higher than that. So it's not the best bar in the world. You're fighting a downtrend right now. There's an hourly buy right there. That was a nice one. It had some follow through. That was a beautiful hourly buy right here, but it had no follow through at all. This bar, this green one, was a pretty good looking hourly buy. Luckily, it had a few a few bars of follow through. None of these closed well. This one was an hourly buy, but not a high quality one. It didn't close attractively. That one did. That bar right there closed beautiful. Wide range bar, closed almost at the high, very attractive. Seriously would have wanted to take that long. All right, but as you can see, it only went a little bit higher on the next hour, and then it crashed right back down again. This bar here was pretty good looking when it was at the high, but unfortunately it also suffered a tail. I hate it when they do the topping tails like that, because what it is when something returns back to the 50% point, it's not a really good sign. You know, we were at 100% bar, and then it drops 50% in. It starts to lose its bullishness there, and that's not very attractive. Okay. This bar here was pretty good looking because it was pretty thick, wide range, and it closed above a bunch of resistance levels that you could see easily on a 5 or 15-minute chart. This would have been well noticed. I like the way the bars after it went. You know, that one was like a pause bar, and then this one turned really thick green, started to break out, and then that one turned green. So that's fantastic. Now, one of the things that you can do, if you're lucky enough to get involved in a trade like this, let's say that you bought here, here, or here. Okay, all three of these you could have purchased, right? Hey, who knows? Maybe you even bought over here somewhere. Maybe you even bought over here or over here. Maybe you got 5 trades on, 6 trades. I don't know. I'm just trying to show you how things work, right? As you start to break out, you want to raise your stop loss. Like when this bar closes at the high, put your stop right below. When this bar goes up like that, put your stop right underneath. And start chasing price. Move your stop. Move your stop. Move it again. Move it again. Move it again. Bam, you just got stopped out. That's the end. 1, 2, 3, 4, 5, 6, 7. Yay! Splat. Oh well. This is just what we did the other day. If you remember, a couple of days ago, we did this on the pound yen. We got long. It rocked up, and I kept saying in the trade room, move your stop up, move your stop up, move it up. And after so many hours, we kept moving it up, and bam, we were stopped out for 100 pips of profit. Not loss, 100 pips of profit. And then the thing turned around and broke and went even higher. Okay, you probably remember it was just 1 week ago. And so that wasn't a whole lot of fun, because we got stopped out for 100 pips, and it went like 50 pips higher, and then in the morning we saw it right back down again, so we were able to take it long a second time. That was okay. Now, let's go and just pick another one. I'm now at 53 minutes on this video, so I'll have to try and speed along. Let's talk about, how about daily buys or daily sells? I'm on Australia dollar right now. You can see that was a fairly decent daily sell bar right there. It broke the low and had some follow through for about a day and a half extra. So you had about 2.5 days down, but it came into support. So, you know, it's really hard to take your trade based upon a daily and keep it and let it run for 2.5 days, see all kinds of money, and then see it go higher. All right, that isn't much fun. There's a daily piercing bar. That's an incredible daily sell bar right there, but it only had 2 small days of follow through because we're in an uptrend. It's hard to be selling something when you're in an uptrend. There is a daily sell bar, but it didn't quite break the low of that candle. And notice that it only went 1 more day lower. Okay. That was a daily sell. Right there, it's a piercing bar. But look, it could have even stopped you right out at the very high. That was another nice daily sell bar right there, but it only went down 2 days. It was very small. That was a screaming daily sell bar. Monstrous. And if you were to take that bar and you put your stop at the high, well, this is why I'm not a daily trader. But if you did that, look, you had to hold it through 1 day, 2, 3, 4 days. You lost all of your profits, okay? They were completely chewed up on day number 5. Maybe you're still short. I don't know. Your stop loss is still there. You had to wait 5 days, and on day 5, you were like, yes, I finally got the trade. But look how long you had to suffer if you took it. Day 6, you're still suffering. Day 7, you're still suffering. Day 8, you are as happy as a pig in the mud. Stop loss gets lowered way down to the top of that bar. Day 9, you're really, really happy now. Your stop loss gets lowered again. Okay? Day 10, happy feeling all gone. It turns green. Uh-oh. Day 11, oh no, you're starting to cry. Okay? You have a lot of money here if your stop loss is there. Day 12, you're getting happier. Day 13, you're happier still. But do you see my point? When do you eventually get out of this? I can't stand being in a trade for 20 days like this. It would drive me crazy. But eventually, you're going to get taken out. It's either on that big green bar there, or it's this one over here, or maybe it's this one. I don't know. It depends on you, really, where you're going to put your stop loss and how you're going to manage it. But eventually, you're getting taken out of this trade. And it stinks to be in a trade for 20 days and then watch 125 pips disappear. You know, you're short, you're in it for 20 days, and 125 pips goes away. And I just can't do that, okay? But that's just me. All right, so let's see. Let's pick another pair. How about euro dollar? I guess we could try that one. Let's go to a 15-minute chart. Okay. Far away from the spaghetti, we see is much more quality. I'm just going back a few days now, not too far. That is an extremely attractive 15-minute buy. Very, very attractive. Why? Because it was down 1, 2, 3, 4, 5, 6, 7 bars in a row. All right? Anything that falls 7 bars in a row and gives me a 15-minute buy signal, a piercing bar like that, I am very much interested in taking that long. And yes, it went higher, but only for an hour, okay? Hit a previous spot of trouble, and then splatted south again. But I would take that 15-minute buy, and if it got up in here and I saw any good quality 5-minute sell bars, I would exit. Yes, I don't have a problem with that. Look at the trade. I mean, the trade is incredible. It's like 20 pips. 20 pips in an hour. I like that little 15-minute bar. Small, not the best looking, but I like the bar right after it. So, yeah, I'd be interested in this buy. You get a pause, you get a break higher. Now you know you got it. So you start raising your stop loss up. Okay? Stop loss, instead of being 5 pips under here, can move right up there. And when this bar closes, and then this bar closes, you move your stop up here. And you're locking it in for break even. Pause bar goes by, another bar cranks out higher. Time to raise it up. Stop loss goes there. Now you've got what? 5 or 6 pips maybe? Maybe that's a 7 pip locked in gain. Pause bar happens, rocks up higher, move your stop loss underneath this bar here or that one there. And just as time goes by, you keep doing it, okay? You keep raising your stop up until you get so tight that this red bar right here would knock you out. And that's the end. You were stopped out either there or there. You take your pick. It's up to you, not me. Okay, you could have been stopped out right there at 122... I'm sorry, 112, wait a minute, 122. 112.20, because of the spread, you would have been a little bit lower, right? 112.20, or maybe 112.17, 112.16, right underneath here. So how much of a gain if your entry was here? 111, 98. Well, you had a spread in there, so you might have even paid about 112. Okay. Eventually it moved up, and okay, so you could get stopped out and have 16 pips, right? 16 to 18 pips of profit on this movement. A lot of people would be very happy with that. Okay, they'd be very, very happy with 16 pips a couple of times a day. These are intraday position trades because they're based on a 15-minute chart. 15-minute chart sings to you in that manner. All right, here's another nice one. As we look here, you can see it fell 1, 2, 3, 4, 5, 6, 7. Wow, beautiful. Started to come up. Gives you a piercing bar, big one. I would want to trigger long. I mean, of course I'm using hindsight right now, guys. Please understand. I'm just going back in time and trying to show you the picture perfect way. 111.88, 111.90. Bam. Time to go in. Okay? It's breaking out. Comes up here to 112.05. You just got 15 pips. It's kissing the river. Half off for 15. Put your stop right down here, plus 2 pips of profit for the back half of your trade. You get a little couple of pause bars. Boom, it goes higher. Now you're immediately moving your stop up like crazy, okay, to lock in a bunch of pips on your back half. Next bar, raise your stop again. A little bit of time goes by. This red bar here, not too pretty. Maybe you even tightened up that much. At 112.16 minus a few pips. Put it at 112.14 or something like that, right? And then you're knocked out. The trade knocks you out for 112.14. See? But your entry was 111.90. Right? 111.90 would be a perfect entry. 112.14 would be a perfect knockout. That's 24 pips. Now, not always can you get 24 pips, especially on Euro. You don't always get that. But there's an attractive 15-minute bar. Look at the other side. That's attractive sell bars. Look at all the wicks. These wicks are talking to me. They're saying, uh-oh, we don't want to go any higher. Don't want to go. And that is an attractive sell bar. Okay? So as you look at all charts, you can see that you've got a lot of bars that are pretty much picture perfect. Like that one is picture perfect. That is a picture perfect sell bar, that red one, but it didn't work. It only fell 1 extra bar and then it went higher. That one is too small. It's not picture perfect. These bars are starting to speak because they're narrow range and they have wicks. They're starting to talk. And that one was green, but when it closed quite red. Okay? So it's an inverted hammer, and I don't like that bar. That bar says I'm a sell bar. And especially when it breaks the low. Right there. That's an entry. Okay? That is an entry. 112.42. Knock it down a couple of pips. 112.40. That's a good entry. But where do you put your stop? Well, right there. But give it an extra couple of pips. Let's say 112.55 right there. So you enter at 40 and you stop at 50, right? So your risk is 15. Come on down. Coming on down towards a previous 15-minute buy bar. Big pause for concern there. I see a bottoming tail and another bottoming tail. Ooh, I don't like it. And I probably would have exited right in here. Right in here. I wouldn't even have waited for this. I would be out. Okay, so if I sold at 40 and it crashed down into 20, I can tell you I'd be half off. And if it crashed down here towards this previous buy bar and I saw prices of 112.10, I can pretty much assure you I would already be out of the trade. I would be gone. Take 20 pips, take 30 pips, I would exit. Okay. Here we see also another downtrend that's igniting. Oh no, I'm way above an hour now. Darn, this video is going to get all chomped up. I've got to quit really soon here. Here you have a bunch of bars going down, and you have a consolidative pattern. You can see you're going down more. We know the market loves to make a couple of drives. That bar would have interested me quite a bit, and the bar after it, I probably would have bought that. Okay, the second one, I probably would have purchased that. I might even have bought that. Just being honest with you, I probably would have. I would go long here. I would go long here. And I would also probably buy right above this, that bar. So I would have like 3 positions here and most likely be relatively scared. Okay, I'm just telling you the way I think I would probably be afraid. I would be in for 3 and worried. But as time went by, the worry would have quickly turned to joy. I would have, on these couple of bars here, I would have been very happy. Most likely would have scaled out of 1 long right about there. On this bar here, I can tell you the chances are extremely high. I would have killed trade number 2. And trade number 3 would have gone to right about there as a stop loss. I would move my stop loss right here. And after seeing this big green bar, and after seeing this breakout that started to break above those 2 wicks, I guarantee you I would have moved the trade on my 3rd position right to the bottom of that candle. When I saw this bar close at the high, okay, let me just point to it. That bar close at the high, I guarantee you I'd be moving my stop right to that bottom. Okay? And wouldn't take much longer after that. I know I would have stopped out. I would have killed the trade and been gone. Ooh, I ate up way too much time on this video. Okay, well, anyway, that's that's the basics of buy and sell bars. We used a few currency pairs, but I didn't get to every one of them. Your homework, shall we say? Why don't you go through every single currency pair that you can find? Do it for a couple of hours on a Saturday, and maybe next Saturday after that, do it for a few hours. And start scrolling around and looking at your 5-minute buys, 5-minute sells, 15-minute buys, 15-minute sells, 1-hour buys, 1-hour sells, and try and use your own pointers and point out what you would have considered to be a really good bar, a bar that would have excited you, both on the long side and on the short side, and then see how much they moved. And what you'll see is a lot of times there's follow-through, and a lot of times there isn't, or the follow-through is very limited. So if we get limited follow-through, we do have to be ready to close our trade on lower time frames. You should be watching everything, guys, everything. You should be watching the 1, the 5, the 15, and the 1 hour, and the 240-minute as well, the 4-hour chart. You need to watch them all at once and be constantly thinking about the prices, where you got in, where you should be booking profits, where you should tighten up your risk, okay? For your stopping out in profit, okay, is preferable than stopping out of profit. We don't really want stop losses, but you still have to think about them, okay? All right, so I hope this video was a help to you, and guys, give me some feedback on this, please. If anything I said doesn't make any sense, or you need any clarification on anything, please hit me up and ask me in the trade room, and I will catch you on the next video. Thanks for watching.